The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. There's a lot to discuss. This is right to it. My service here is both the Tiger Technicians Hour, 10 o'clock to 11, but it's also the opening call, my daily newsletter. And as I was saying yesterday, we were long, a little bit aggressively, the Dow, only because it seemed to me through the rotational aspect that we're looking at, the selectivity, and yes, I know, I call it the Dow 30. There is no, it's not industrials anymore. We've got, about three industrials. I call it the Dow 30, and I think it's a perfect mix of the general market era. I mean, you've got everything. You've got Salesforce. Look at this, CRM. I wonder if it's going to hold the gains. Look, it's already at the low of the day. It's up 20 at 187.42. It opened at 193.12, spiked to 193, and now it's at 187. This is going to be very important because the Dow itself has to have its own momentum to be able to go higher. But most importantly, just as a trade, it looked to me like we were extremely oversold, and that if there were enough selective stocks that were able to move the markets higher, and then I think we've got to be a little careful. I'm actually kind of cautious as it is, although we have no short positions. Normally when the Dow flips after a peak D and flips to negative in the under the 14-period moving average, I go short. I didn't do that this time. Didn't even take the DOG, which is 1-to-1 short, because we have long positions. We also have some aggressive long position. But it seemed to me in the rectangle formation that it was sorting itself out. Now I'm a little worried that the rectangle formation has so clearly tested the left side low, and that's the low of the week. Let's just go to the week of, it wasn't this week here. That was 32,654. It's 32,573. And yesterday's low went down to 32, look at this, 32,500. It held, I think, 32,506. Yeah. I mean, we're real close. I don't like that. This is the H pattern, so just be careful. But on a very short-term basis, I think there's just enough, there's enough negativity. You've seen it in the last week of the selling pressure. Now they just missed. Normally you'd see some alleviation of that. Okay, within that context, what we're looking at is, here's your Chapman wave from Friday a week ago. Chapman wave Roman candle. Don't want to go into that again. It opens, makes a fractional high. It might not, but it makes a fractional high. That's just enough to make a wick that you can light in a Roman candle. It plunges down and then closes halfway to 2/3, above the wick low. And then the next day, within two sessions, the bar is the bar. Within 2 sessions, if it starts to trade halfway into the wick, there's a really good chance that it's going to not only test but break the left side low. It did that exactly on the second day. Third day was a long-legged doji candle, and the rule of thumb for me is that if there are 2 closes above the high that was made with a long-legged doji candle, that's 32,746.15, that would say, good, now you can start to consider, it's not a guarantee, but you can start to consider that a moving average, a doji, a gap, at least an icon on the upside is something that you can target, and I'd say 33,000 would be the next level that I'd be looking at as a potential. That's all I'm saying, for 3 reasons. One is this whole little complex thing that I've discussed. The MACD's not very good. The histogram barely improving. The stochastics way down 8%. On-balance volumes improving a little bit. Nothing here is good. Only the patterns that I'm looking at in terms of the Chapman wave notations, etc. And you've got the test on the left side of the arch formation. This is the rectangle in the weekly chart with all these bars. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. About 12 weeks going from a low to a high that was under the previous high, making an arch formation and retesting. This retest is imperative. We start to close on a weekly basis below 32,300. This is a weekly basis. I'd say, oh, you better be careful. But under 32,000 says, watch out. That is serious stuff. So you can see, I'm talking more very cautiously than extremely optimistically, but just on a basis of using Chapman wave techniques. That's why we did grab the long side, and we'll see if that's going to work out on the 3 times long Dow. Just very specific, and we do have other positions. We are trying to get one position, and I didn't want to raise the price today. I have a rule that if you keep on waiting, and then you get impatient and you raise the price, what happens is it gives it to you, and then it goes even lower. So I'm trying to have patience. We'll see if that's going to work. I might have to raise it because we've got potential for a split position. All right, I've done that. Now, there were 3 things that I was looking at. Now, one was the technicals on the daily. The other is the technicals on the weekly. And the third aspect is just the psychology that is going on right now, the weightiness of all the negativity as opposed to this momentary little bit of sunshine that I see. All right, so within that context, let's just go right on. S&P got a lot to do, so here we go. S&P is down again, down at 10 at 39.41, attempting in a leg D to the downside. Remember, troughs on the downside have lowercase A, B, C, D, E, F, G. It's not that at D on the downside you start to look for some kind of a rally. You have to look at the technicals. Downside, I use technicals a lot more than notation, although let me just do this quickly. In the Dow, that whopper of a move down, single leg down to a trough A, almost 2,000 points, and then a bounce and then a failure, said that next leg down, if it's very short, like this leg B, probably a trough B, it says you could get a pretty decent bounce of something like that. So that's how I use the notation on the downside. On the upside, you can see peak D, the 4th highest peak. That's where we always get cautious, and that's what the Dow did back in January and then again in February. All right, here we go. QQQ, 1, 2, 3. Down, leg D to the downside, and it is at minus 149 at 289.73. You can't just have the Dow. The general can't lead without the soldiers. It's just, that's the way it works in the market. However, it can do it for a little while, just as you can get the divergence between gold and the dollar can go for a little while. Go parallel for a little while, but mostly you're always looking at them in counterpoint. So there are certain rules that I abide by. The market doesn't necessarily have to listen to me. That's kind of what I look at. Yeah, I will. Yes, question came in. I will go to the E-mini. There's just so much I need to do right now. E-mini is still so far in an upward trajectory, so let's move on. I had a question. I don't want to skip the question. Can you look at live cattle, LEM3? I don't get it. Why am I getting confused? LCEF. Well, if you don't mind, I'm just going to do this right now because I have continuous cattle. Now, I don't know if this is different to what you live cattle. So this is crude oil. Live cattle is LC. So if you don't mind, I'm just going to do this for the moment, and then I'll figure out how to get the symbol that you had. I listed a PG in the daily chart, a G/C. Actually, it should be a G/C in the daily, a G/C in the weekly. I'll be back and I'll figure it out. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so I'm just going to go to the crude oil continuous contract. I do have it, it's LCM20D, that's how I get it, but I think I keep going to crude oil. Let me just finish crude oil. Crude oil is bouncing a little bit up 49 cents at 78.17. It's in a trading band. You remember, a sideways trading band can last a lot longer than your patience. Let's go to LC now. So I have the 9-period moving average in the daily chart still very strong. Technically, 1, 2, 3, it took 4 bars and not 3 to make that new high. Oh, I made a mistake. I thought there was something wrong with this. It's actually leg F to the upside going to a peak F, right? There it is. That was not that little gap there was the holiday. That's why it is. So E to F. And now it's pulling. All it's doing is pulling back. If you are a trader, then I'm going to say, let's do this, because that makes a big difference here. I haven't got a sell signal yet, not even a sell signal, so it can't be in a sell mode. The MACD has turned down, stochastic down 61%, on balance volume is good, relative strength is starting to weaken, but it's still pretty good. So being short, if you treat it as a trade, I don't know where your entry is on the short, I'm just going to tell you that if in the next 2 days, instead of today's low on the continuous contract, let's move this up a little bit. I'll have to change these so that I can see this a little bit better. So today's low is 164.45. And let me just double check to see LCM23, 164.20. Yeah, this is 160.37. So there's a difference in price. So you're looking at the LCM. So I'll do the LCM because that's really important. You can see that on the daily chart, the weekly and monthly are not quite the way I like it. The continuous contract gives me that. This just says that big candle yesterday, I didn't see that on the other one. So yesterday there was a very long candle up and down. It closed towards the lower part of the halfway mark. And today it's in the lower range. You want to see, if you are short, you want to see 160.15. So 160.10. Yes, just make it as simple as possible. You need very quickly to see a close under 160, number one. Number two is if there is a bounce, and that bounce takes you on this contract, and what is this? Is the June contract. If it takes you above the 9-period moving average, the green line of 160.86, I think it is, 160.66. So if it takes you over 160.70, I would just say, I don't think this is going to work. It could work. It's going to take a little bit of time, and then it might not give you the downside. You want immediately, once you get the sell signal, which is not yet in, once you get the sell signal potential, meaning that the 9 is actually getting real close to closing under the 14, that's when you're going to get your acceleration to the downside. So this is still very early, and it says there's still enough residual strength. So I hope that helps you to say, within the context of what you're looking at here, and I might be a little bit behind. I'm going to go to the 10-minute chart now. 10-minute chart gives you, look at that sharp pullback from peak E in the 1-minute chart of the E-mini. So I'm going to use this. What did I say it was? LCM23. LCM23. There it goes. Yeah, this is exactly what you want to see. You see the arch formation. And so what do we have here? Did that make a lower low? No, it didn't. So this is peak A, peak B, peak C, peak D. That you're always looking for in the Chapman wave methodology, a D, because a D could be an E, but D is really where you've got to be careful. That's exactly what happened. And then it plunged. So it gave you a great sell-off yesterday. Now it's got the arch formation. And this is the 10-minute chart. Within the arch formation, I always love to, you might not be able to put arches in your platform. You might only have straight lines. Ask them, call them up and say, I want arches, a semicircle. But you could have just put a straight line up and a straight line down and called it inverted V. Now what I'm looking at is, within the context of this pattern, if there is a close below 160.10. So it's kind of exactly what we were looking at, but I'm still going to make it 160. I'm not interested in the 0.10. I want it under 160, and I want 2 out of 3 bars in the 10-minute chart to close under 160. And then that says, now you're going to have 160.30s as your resistance, and you should expect that it should continue lower. That's the way I'm looking at it. If this holds, and the next thing you know, maybe it just bounces under that 160.10 level and then quickly closes above it. That says it makes the whole area of 160.50 to 160.70 strong resistance. If at any point in the next, this is a 10-minute bar, in the next day, give it a whole day plus tomorrow, there is a close above the high of 160.82, be careful, because that says it can bounce to the next level. That'll be 161.13, the 200-period moving average. So on a very short-term basis, yeah, you've got your position. I'd have a fairly tight stop. This has to work. Why? Because you saw, I was looking at the 9-period moving average so sharply above the 14 that says there's internal strength. You could easily get quick spikes before this really gives up the ghost. So peak E in the 1-minute chart, in the E-mini, I'm not going to spend time on this because there's a lot going on. Tomorrow I'll spend quite a bit more time maybe on the intraday action, on anything you want. But in the meantime, what we're looking at is the next thing I want to look at was, within the context of the different stocks that we're looking at, look at this. CRM has bounced off the low of 186.52 as at 189.03. Remember, I like to look at it as a 2 to 4 day sequence after a huge gap up or gap down. What happens next? So I'll talk about that in a moment because there are just too many other things. I want to go to gold. Gold right now is down about 3.5 at 1842. This is what I'm looking at. The attack of the 200-period exponential moving average in the daily. And this is in a brand new trough C. And trying to move above the pink 9-period moving average, which is below the 14, says this whole cluster right here. I don't want to draw anything in here because it's going to have other implications. But this is a really important moment And I'll explain why in the context of looking at silver. Here we go, silver. Silver is trading much, much lower. It's at down 13 cents at 20.95. When I say much, much lower, I mean that I've got a down arrow, meaning it's in a sell mode in the weekly chart. That's going to take a lot to change because this is Thursday. We've got Friday still to come, and to change the sell, where the 9-period went under the 14-period moving average in the weekly chart, is going to take a huge move up, and that would say that I just don't see it right at this particular moment. So I'm just going to suggest to you, now the question, a number of people over the last 2 days said, would I look at an entry point in gold, and what do I think? I like the fact that gold has been in play, even though the dollar, let me just do the dollar here, the dollar in the larger context is still a really important currency, international currency. The dollar still has, it should get to a leg D. I spoke about that earlier, above 105, I think 33 up into the 105.40s. That'll be very good. I don't want to rush this because I think it's really important for me as well. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Let's just do this because, yes, I've got SCO here. Southern Copper is doing very nicely. Let's just go back for a moment. So I looked at, where was it? Did I write it down? Oh, no. Oh my. EGO. Oh, EOG. That's it. EOG. EOG, which is, no, sorry. EGO. Ah, there it is. Eldorado Gold Call. So look, here's Eldorado Gold Call. trading at $9.46, down 16 cents. But look at this move from the Chapman Wave peak D. Remember, D is where we start to get a little cautious. It plunges from the just under 10, and it goes down. I mean, percentage-wise, down to the 806-ish area, down to 810. And now it's trading up in the 9s. It hit the 960 yesterday. That's a fantastic percentage gain. Not only that, it's a peak C in the weekly chart is pulled back. So I'm going to emphasize, be specific in what you're looking at. There are times, for instance, we are long a couple of generic things, in other words, sector ETFs. I just want to be there because I feel I can't pick the individual stocks because there are so many hazardous stocks that they have the potential to drop 20, 30% if something goes wrong. But I like the sector, and I don't really want to get the leader of the sector because it's price-wise it's very expensive. So I'll sacrifice a little bit and I'll be a little bit more generic. I don't mind that. Number one. Number two is there is a particular sector for 2 weeks now we've been trying to get in and we keep missing it. I missed it by 7 cents the other day and then it ran up. But I'm trying to be patient because I like this. And in fact, the longer it takes for me to not get in, and the stronger the support levels are. It still makes it a little difficult because if I raise my entry point, that's the day it's going to come down sharply. That's my fear. And I have a split position, so I shouldn't have been. I should have said, I want in, and then we'll add the second position. But it's still within a point of what we want, so it's not a big deal. But you understand what I'm saying? So if I say to you, no, it's just terrible. I mean, this is gold. Wow, why would you want gold right now? Look at Newmont Mining. Newmont Mining, one of the really great companies historically in gold, down from the almost 87 area down to the 43, gets almost cut in half. It looks terrible. ASA is the one I always look at. We don't often get it, but sometimes we do. Also, it doesn't look too great. This is ASA Gold and Precious Metals. These are five gold stocks that are like a fund. I think they are centered in the Bahamas. So, and look at NG, another one. This is one we often trade. We have some success in. Very low price stock, 572, Nova Gold. So it's very specific. So what I'm going to say to you is, if you're looking at GDX, because the weighting has so many gold miners in it, and not all the gold miners are working as well as they should, look at GOLD. Look at this one. This is Barrick Gold. This is, wow, it's in the doldrums, right? So I'm just saying to you, I'd be a little careful. If you're looking longer term, and I think that this dollar move to the upside, if it gets to that leg D, that's when I'm going to do an assessment. Of course, we are still long the dollar from 2018, so it's a very long-term position. I have to look at it very differently. So be stock specific, number one. If you like the GDX, and so far I think that the rally off the low at about 26.80s or whatever it is, and now at 28.08, I kind of like the way it's moved up, but I'd have a little patience. Let me put it this way. If, in fact, the GDX goes to 28, let's call it 29.35, up about $1.25 from here, that's the kind of action that would say to me, good, now it's stabilizing, it's forming a really good base. So the only thing I would say is, if you're interested in the GDX, I would have just a starter position here, but I would actually have a stop. I'd have a 2-point stop that'll take you below the low of 5 days ago. But just at the moment, and as it moves up, I'd have that as I tighten the stop a little bit. So yes, but it isn't really the position that I would want. It's just like getting back. If you've been in and now you're out, I'd say getting in is okay. All right, I hope that helps you. And I wanted to take a little time on that, because if you think the gold and dollar go together, gold and silver go together, silver's telling you, not yet, baby. I need a little more time. So now the other thing that I'm looking at, so that was 3 questions I had. One was that. Another question was, so look at, this is high-grade copper. This is another reason why I could not get overly bearish. High-grade copper is actually holding well. It's had a couple of really good days, but it's actually in a rectangle formation in the lower part of that formation. But if you look at the weekly chart, it's holding the 14-period moving average very well. It's down 0.07 today at 4.08. If you go to SCCO, this is Southern Copper. Yeah, this is a pattern that's becoming more and more familiar. There are so many. We have a, yeah. So I'm looking at lower lows and lower highs happening a lot lately. And it just says it's in a consolidation phase after a fantastic move from the 60s. Now it's in the mid-70s at 74. So if you're holding SCCO, if you want to get into it right now, I think it's a little difficult because even if it rallies, I think it's coming back to 74 over a period of a week or two. So I think that I'm going to draw this in. I like to draw these lines, and then I say, let's just watch that line. That's the line that I had for the Dow, and we went under it, and I said, oops, you got to be a little careful. But now we're a little bit oversold in the Dow, so it could rally some. So this is make this a little bit weighted more there. So you can see what's happening. This is your magnet line. Even though you're making lower highs and lower lows, this is your magnet line. So if you're in this, I just hold it right now. If you're looking for a new position, I'm not saying don't get into it at this particular point, but it is making lower lows and lower highs. And I would say to you, I would just start a small position at 74.16. And even if it ran up, I'm suspecting that the 74.50 area is going to come back to be tested, even if it runs. So let's look at it again, either tomorrow or Monday, and see what's happening. But yes, I do like it. I love the fact, look at the weekly chart. It's holding so nicely above the 9. The 9's way above the 14. The MACD is good. Stochastics just pulled back under 80%. So all of it's very nice. I'm just saying, if you have no position, I'd start a position right now, but it would be a smallish position. And for this, I would have, just for the moment, I'd have maybe a 2-point stop, right? So that's SCC. I'm not sure that was a question. Thoughts. Every time I think it's looking toppy, away she goes to higher places. You remember, so we had people were talking about Exxon like that as well. And then I said, no, everything I'm looking at says, yes, Exxon is not really a shorting stock, unless it's a real quick trade. It's holding beautifully, but I think it's getting very toppy in the 114 to maybe even 120 area. And look, there it is. It's just not doing very much. Beautiful dividend, beautiful capital gains if you've had it for a while. But you can see, and it's done the 1-to-1 of the falling axe formation in the monthly chart. It's done everything. It just needs a little bit of a timeout. So I'm just saying that's the same thing with copper. FCX is the other one. Now it's a little different chart. FCX has been making much lower lows and much lower highs. This has got a slight report by Karen trading at 42.51, down 29 cents. This one I'd be a little bit more careful. I like SSCO much better. I'll be back in a moment. Dow's up 122, S&P's down, just a little down 8. I'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it could seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Let me just see if I've got this right. LEM. Let me just use the LC. Okay, so you're getting the test of those lows in the crude oil. Live cattle. What did I type in before? Did I write it down? I thought I'd got that LCM23. Why did it not work this time? Oh, it is. Okay. So it did actually get to the 106.08 area. Now it's bouncing a little bit. Yeah, it's going to be one of those things. All right, we're back, and I'm looking at question came in here. Where did it go? Could you do the different currencies? Sure can. So here we go. Look at this. Dollar, DXY, needs, if it's a Chapman wave buy mode, which technically it is, it needs a new leg D, and that I said it will be a 105.34, did I say? Just give you the 1035.37. That's on the dollar index, and it's trading right now at 104.94. EUR, USD, look at this. This is fascinating. Look, we had a very nice leg A to the upside. See, look at gold. Think of it this way. You see this 200-period moving average? And I love to have these things just sitting there. I don't talk about a 200-period moving average until it becomes important. Look how important it was. It was a magnet back in November. It got there, went to a peak F, pulled back under it, and then spiked a little bit, pulled back, up a little bit, pulled back, and then all of a sudden went to peak C1, C2, then D. Then it makes a cup formation. Remember, I said let's measure the vertical line from here, that's December around about the 13th, to here, which is about December the 20th, January, what was that, January the 2nd. And I said, it's a little bit weak, but not very weak because the 9 is still over the 14. That's what I'm saying to our shorter of the live cattle, that if the 9 period is still strong, even though you can get a signal, watch out. That strength can stay there for a while. And you're going to treat it as a very quick trade. And that that's my son. Not even know that for over 20 years at this time of doing my show. Anyway, so it then went higher. You see, it went towards the 200-period moving average, then ran up, went to a peak G, pulls back from the 1.10 area, 1.10, and then comes back, tests the 200 period. Now this 200 period is like a magnet. Now it's kind of stuck there unless it starts to go to the 1.78 area. So just be careful. Let me just show you the same thing here with the GDX. The 200-period moving average is very strong resistance. Look how it became the same thing, the magnet, the sine wave, up and down and up and down, and then support before it broke out to the January 27th high of 33.34. This is just saying to me it isn't quite ready. That's what I'm trying to point out. Look at the USD JPY. This is the yen currency pair. Look at that 200-period moving average. It became support, support, support. Boom, it became resistance, resistance, resistance. Far away at 127.22, saw us a peak A, B, C, test 200-period moving average. Can't get away. Then pop, it goes to E. And how far is it away? And now it's gone to a leg F to the upside. F could be recycling. I don't know. It could still go to G. It could be a whole bunch of things because within 3 bars, it made a leg to the upside. Actually, within 2 bars. So this has to be considered as potential F/B. I don't want to even put the B in because let's just see what happens here. The MACD is good. The 9's over the 14. The price is way over the 9. The stochastic's flat at 92%. I think there's more room to go on the upside. So I'm just saying be real careful. There's no hurry to get the gold did a spectacular move, and usually when it takes a breather, it takes a bit of a breather. So just treat it that way. That's the currency pair. What would go together with that? I was looking at that. XAU, did I put the XAU in? I think I renotated that. Yeah, look at this. So the XAU made a peak G just under 140. It goes down to 110. Now it's at 117. Hasn't even gotten back. Look how important the 200-period moving average has been. Just have respect for it. That's all I'm saying. So that would be resistance at 120. It's trading right now at 115.96 and is kind of struggling. And the MACD hasn't crossed positive. The histogram's improved. Price has improved, but it hasn't crossed positive yet. So that's all I'm saying. Okay? So we've got that out the way. Question came in. Oh, and now let me just do these other things real quickly. Wrote it down. Oh, on computer, I had a question about that. Yes, I'm a little cautious about it. I've always loved this on semiconductor. I always miss it. We've never owned it. I just look at it. Oh, my God, it's gone up. And look what it does. You have to have so much patience. Look, in the Chapman wave, you expect peak A, then a B, and a C, and a D. It doesn't tell you, as long as the low is not taken out, it doesn't tell you how high. And look at this. Would you be able to sit through a move from 44 to 75 and then a pullback to 54? That's a big percentage. Oh, and then it makes a nominal new high in the 74s. And then it pulls back to a higher low, but down under 60. And then it screens from 59 to 86. And now it's trading at 74. That's 12 points. Those are big moves. So the question was, when would I consider buying on? I just say step aside. I think that the XLK, if you look at the XLK, which is the S&P Select Tech Spider Fund, had a high of 177 back in December of 2021. This is not 2022. This is December 2021. On the daily basis, it's pulled back sharply. It's now sitting and testing the 200-period moving average. When it does it this number of times, I anticipate it's probably going to go under it. And look at the weekly chart. Yes, it's a peak E, but look at the volatility. So I'm just saying to you, in the whole area, in the area of, let me just go apples to apples because on is a semiconductor. Let me go to SMHs. The SMHs have gone sideways. They've held very nicely on a weekly basis. The monthly's improved. And this to me is the other reason why I thought there's a chance that if the semis can hold, and today they're down 2.68, that's not a good sign at 236. But if they can hold quite well on the daily chart without going to the 226, 200-period moving average, but in fact could try for 244, 246, 248 in this very first part of March, that would be quite impressive. It'll be saying, okay, semis have had a huge move to the upside from 196 all the way to the 250s. Now it's time for a digestive phase. But if that digestive phase uses, remember, I like to think of time as equally important to anything else, price or fib, or Chapman wave, no take, anything. Time is important. Let me just add a question right here. I better get to it before the break. 0 days to expiration. The options on SPY and Qs are daily expiration. You know, I forgot about that. And we had someone who had a daily options expiration. Yeah, just that out with me. I guess I haven't done enough with options for a little while. I'm going to have to get back to options. They provide amazing information. Big money is trying to bully the markets. Hundreds of thousands of contracts. Oh, thank you very much. Good. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
It can last a lot longer than your patience. That's what I was mentioning in the den a little earlier on. We actually did not break the low. This is very interesting for a little while. Look at this long rectangle formation, and then finally at about just almost 9:35, you start to see a cup formation, and we've made these cup formations keep breaking higher. So you're out of the rectangle. That makes this whole area of 39.43 very strong support that must hold on any bigger move. I don't know if this is going to be a two-click session because it never took out that low in the 39.30 area, but to do that, you've got to see this 10-minute bar start to move above the rectangle formation that we look. This is the E-mini I'm talking about. Sorry, I just took it for granted. If you're listening without looking, that's a problem. So the next big resistance is going to be right here. This little doji candle at 1930. That's 7:30 last night. at 39.65.50. Look at the way you got these two doji candles and whoosh, you started the big down move. So that would be the target on the upside if this is going to be a two-click session. We'll watch it closely. Now, a couple of things that I just wanted to wrap up with. Larry Pesavento, I think you all know Larry. He's a connoisseur in using a couple of techniques that he's just used over and over, not hundreds, but thousands, probably not thousands, but tens of thousands of times over his 60 years of doing day trading. And so he's got a webinar coming up this Wednesday. And what's really fabulous about what Larry does is he identifies beforehand where you're going to look for an entry point, either short or long, and then he knows exactly what his parameters are, and he does it over and over, and he does this measurement just fabulously. In my case, I need to find that, and then once you're in it, you just sit there watching your moving averages, etc., and ride the wave. In other words, whichever way you ride the wave. But with Larry, it's nice because before you plan your trade and do it, and it's simply a fantastic